Good Wednesday morning, Market Chameleons and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show. This man, Dimitri Pargamanik. How you doing, D?
Good morning, Will. How are you?
Great. You want to start with the disclaimer?
Yep. Do you have that up?
Oh, do I? Thought I did.
Yep.
There you go.
While we're bringing that up, everyone keep in mind before we get started that Will and I and Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need advice, call your registered investment advisor, call your broker. That's what they're there for, to provide you with guidance, give you advice. There's the disclaimer.
Excellent.
Okay. And I'm going to share my screen. As I'm doing that, if you guys are joining us for the first time, Will and I, we do these shows in the morning to try to help answer questions you may have about the Market Chameleon tools, the data or analytics. If you would like to ask your question live, we provide a link to Zoom. Once you click on that link, it's in the live chat on YouTube. Once you click on that link, it takes you over to Zoom. When you're in Zoom, there's a button, raise your hand. Click on that. You could ask your question live, direct. If you prefer to type your question, type it into the live chat on YouTube. Will is monitoring that. He'll read them back to me. So while we're waiting for more people to join us and people to put in their questions, we'll start out taking a look at the pre-market report to see if we could get some insights on what's going on in the pre-market hours, and then we'll move on to the questions. Okay. So the pre-market report, these are stocks trading in pre-market hours. I'm going to scroll down and we have a list of our most active stocks, our biggest percentage gainers, biggest percentage decliners. I see 52 stocks made our percentage gainers list and 51 on our decliners list. So right now we're looking kind of like a neutral bias at the open. You know, it's a mixed bag from this perspective. And let's check what's going on from the top view. So we have this calendar view. If we scroll up, we see that you could go back days and see how the stocks were trading in the pre-market hours. Today, July 26th, we see that 348 stocks so far are trading higher than previous day's close, 349 stocks trading lower. As far as volume, there are 84.4 million shares trading up versus 40.6 million shares trading on down volume. And if we convert the volume to dollar value, got $1.6 billion worth of stock trading higher versus 1.6 billion lower. Again, this also shows a mixed bag so far in the pre-market hours. So another thing we could do is scroll down here and we see that these lists of stocks have low cap stocks in there. They're ETFs and leverage products, preferreds, anything that's listed on a major US exchange. If it's trading in pre-market hours and meets our thresholds, it could make this list. And to narrow down this list, we could use the filters up here. So I'm going to use this one in ETF. I'm going to drop it down and you get a list of ETFs to choose from. I'm going to select this one, SPY, S&P 500 ETF, the broad-based ETF. And when we select it, the list below gets filtered by stocks that are holdings in the SPY ETF. These are S&P 500 constituents. Here we see 9 stocks made our percentage gainers list, 8 on the decliners. Also, from this perspective, it looks like a mixed bag. I see, Google reported earnings, they're up 6% in the pre-market hours. So I guess their revenue looked pretty good. And so far, they're still dominating that search, the search on the internet,
Yeah, and it is interesting because we've talked a lot about ChatGPT and people have referred to it as the Google killer. I know we're only about 6-8 9 months in, but it certainly hasn't affected Google as of yet terribly.
Yeah, so far, yeah, so far it hasn't impacted. It's very early, and Google also has their own version of the Chat GPT called, I think, Bard. And by the way,
Yeah.
Meta has their own version, right? So here's Meta, they're up 2.2%, and I believe Meta has their own version of Chat GPT. What is that called? The Llama 2, I think. Is that what
Llama 2.
I think that's what it's called. So they're competing. They have Chat GPT competitors out there. So far, I don't know if you tried them. I mean, Chat GPT seems like, it's ahead of the game, in a lot of ways. But these are big techs, they definitely can potentially catch up to it. And, I don't know if it'll kill the search engine completely, but they do have that technology as well out there. And how do you monetize it?
Yeah, and
So,
really the search, when you're doing a search, you're really looking for answers, right? Most of the
yeah,
time.
right,
And the thing is, the answers have been driven by ads, which really aren't the answers, right?
right,
It's so
right.
it's interesting. How do you move
Yeah,
forward? Because the internet's been built on the kind of model that Google has created.
right.
And
Yeah,
how does it move forward? Because there are a lot of businesses that drive the answers but need revenue to it's not free to run
right.
a website or a business online, right?
Right. Yeah. So whoever's providing these answers, whoever's, all over the internet, who's ever, providing the content, the text, these websites, right? Somebody is putting resources to create them, to maintain them, to grow them. And if and a lot of what pays for it is either subscriptions or ads, right? That's what's right now paying for all this content and the internet to work. If you shut that off, then the internet has no revenue, right? And I think that Microsoft is looking at ways to try to how do you generate revenue with this new model where you just get direct answers through ChatGPT and OpenAI. So we're like a couple minutes into it. Will, if you have questions, I'll take them now.
A new user for real was asking, can you develop a filter? I mean, this is actually something that may want to email us, but he asked, can you develop a filter that will analyze the sentiment of institutional order activity in the options market, specifically focusing on selling or buying patterns with options screener? I would actually, for real, email support at MarketChameleon.com with your requests. We get lots and lots of that's more of a request than a question.
Yeah, these are like feature requests, which we get a lot. And I think
there may be things you're looking at. If you do want to come on live, click the Zoom link and kind of walk, because we do have so many filters and screeners that you may be able to find some of the things you're looking for. But as far as a filter, you'd have to email support, and there's a long list of requests for things to add to the site, and only so many people to do it.
Yeah, but I think like people, and I appreciate it because that when people are using the websites and they're finding value, and then they get an idea, and usually like the idea involves either it could be a filter, it could be running a certain analytic on the data, or presenting it differently, and we get a lot of feature requests, like a lot. And while I appreciate and I want to help people, the problem is that a lot of these feature requests are very unique to that individual, or whatever that individual's trying to answer. Like, there's a specific question they want to answer, and they think, well, this filter or this feature enhancement will help me answer the question. And when we look at the website as a whole, we can't customize it to each individual, right? Because we have developers who have to develop and maintain the feature, and then we can't make it available just to one person, because the website, it's available as a platform to everybody. So if you can imagine, like, what it's already, there's a lot of data. We get complaints sometimes that there's an overwhelming amount of data. But if we just took this report here, we probably get feature requests every day for this. There would be buttons all over the place, right? And it would be unusable, because even if we create your feature, imagine like creating 10 more features at the same time that you don't even care about, right? Like, you don't want them, and you're like, I just care about mine. So when we get these feature requests, when we get these suggestions, and we do read them and we pay attention, we have to make a decision. Is this something that we find either, we get a lot of requests or similar requests for that there's an actual demand out there for a lot of users, then we'll take serious consideration, then evaluate it for an enhancement. Or if we believe, yes, we didn't think about this is a feature that we do believe will actually improve it for everybody, like everybody will be able to use it, because it makes things either simpler, it makes things faster, it makes it more intuitive. Like, so there are certain feature requests, yes, that we could see that it would be we could apply it across the board and everybody will benefit, immediately, and it's a big improvement. But a lot of times, we'll get specific filters, or like we'll get feature requests. We'll say, I'm looking for, if the stock crosses the 20-day with the volume of this, and then this happens, and then that happens, and then this happens, I want to see it, and I want to get an alert. Like, right, but this is very, custom to just you, and you're just trying to, and I appreciate that, like, you're trying to find the answer to it, but we can't put like three developers on it to create this custom report so you could see it, because then we're taking away the resources from everybody, right? That means we're basically working for you to get that answer that we can't, and then everybody else using it, we're taking away their resources. So we try to evaluate it from the perspective, are we going to benefit the entire community, right? That's how we approach it. Like, will this enhance it and benefit everybody that's trying to use the research tool?
Then you can also build an item that people think will be interesting, and then when they realize the outputs, it's not as interesting, right? And it may not get used
Right.
the way
Most of the time, and this is with trading, with work, whenever you're working on a business or most of the time, the things you try do not work out, or do not work out as you expected. As expected. It doesn't. That's part of business. That's part of business. That's part of investment. That's part of, look, take these stocks here. These are the top stocks: Meta, Google, Amazon, Microsoft. Go look at their history, read their earnings reports, they try lots of things that don't work out. Lots of things that you're putting in resources and money, and there are people right now at Google and Meta that are getting salaries working on projects that will get shelved, that will never, become commercially viable. They're not going to work out. There's not going to be, either it didn't work out as intended. It didn't, they might try to launch it and there's not enough demand for it. Most things that you try do not work out, but you do have to try, but when you do try, you have to be careful with the approach, because there's a limited amount of resources on ideas that you could try. And that's how we approach it as well. Well, okay, we got, all these, all these requests, we get all these emails and we read through them, and, and we have limited resources. What are we trying? We know that most of them will not work out. We've developed features, by requests that, once the person saw it, oh, okay, then that's not what I expected. Nobody else wanted it. We had to take it off, right? So that happened too. It happens, and sometimes we thought, okay, maybe this.
Yeah, well, we thought it may have been an idea worthwhile, right?
It might be an idea worthwhile, and it was an interesting idea. Well, okay, let's try this out and see. And then you run the test, you run it, but then in reality, it could look much different than you pictured it or that you're expecting. Right? That happens all the time. There's a lot you could run your, we run analysis on data all the time with, like, what do we, do we expect, this model to improve, this accuracy to improve, lower error. We run models every day, all the time, and most of them, are our tests or whatever, they show failure or whatever. We have to keep building it and tweak it, right? So most of the things that you're going to try are not going to work out.
All right.
But I do appreciate, not to say I don't appreciate, because I do understand you're coming from using the Market Chameleon, you're using the data, and it's shown that, yes, you're finding it useful and you want to, dig further and get questions. I'm just trying to explain to you why, when we're just have to be selective with, what we're developing. Okay. Any other questions, Will, or?
Nothing's popped up, D.
All right. I'm going to build on the question. We have a couple minutes, so I think it was from Rob, and we talked about synthetics yesterday and cost of carry. And I think there was a follow-up question with a covered call. And the idea behind the covered call is that certain stocks pay dividend, right? So the strategy would be, well, I'm just going to use kind of SPY, assuming, okay, here's SPY. Let me get to this September, because it looks like they have what's going on here? Let me refresh. All right, so let's say all right, hold on a sec. Looks like my thing is a little slow, but let's say in September 15th, there's a dividend. Let's say we're closer to it. And the idea is, well, what if I did a deep in the money call, right, and bought the stock? And the idea is, well, in that case, I'm just going to collect the dividend, but the deep in the money call will offset my directional risk from owning the stock. So let's just set this up to see how it looks. So I'm going to go, let's just go to, let me just make sure that, let's say we go 410. So if I run this strategy, right here, selling the call, it looks, because it's deep in the money, right, for between here and here, it looks, the profile looks like I'm short stock, right, 1-for-1. So it looks like, well, it's so deep in the money, the delta, it acts just like selling short a stock. Okay, so what's the hedge? Well, the hedge would be buying the stock, right? So let's say I buy the stock. So you see here, wherever the stock goes, as long as it's above, the 410 strike, right? So we're deep in the money right now. I mean, that's like $40 in the money. And this, we got to imagine this would be like, a day before the dividend or whatever. So the idea is, well, if I have this strategy, right? If I have this strategy, well, it doesn't matter if the stock goes up or goes down. My position is hedged, right? Because if the stock goes up $1, well, I'm going to lose $1 on this call, but then I'm going to make up $1 on the stock, right? So they offset each other. What if the stock goes down $1? Well, I'm going to lose $1 on the stock that I own, but then the call that I'm short will profit $1. So it all offsets. So if it all offsets and it doesn't matter where the stock goes, well, the stock pays a dividend, right? The SPY or whatever stock will pay a dividend. Let's say SPY pays $1 dividend. All right, let's say $1.46 dividend. Well, then if I hedged off my directional risk, I don't have Vega risk, I don't have theta. So if that's the case, then the stock will pay me $1. The option doesn't pay dividends, right? Options are derivatives. They don't pay any dividends. These are contracts, right? Unless you have a contract that stipulates that, but standardized contracts don't. So I'm not paying out a dividend, but I'm receiving a dividend. So if that's the case, then I get this riskless $1.46. And the problem is that, number one, is that the person so you sold the option, but the person who owns the option, right, the holder of the option, they know that if they continue to hold the option, their option is going to act like stock, up or down, but they don't get the dividend, right? They're not going to get the dividend for holding the call, right? Because you're not giving them the dividend. So they do have the option to exercise that call. And if they exercise that call, the call gets converted to stock. So the call goes away, and now they have the stock. Now they have SPY stock. Once they have SPY stock, as long as they have it before the X date, they're going to be entitled to that dividend. And really, why wouldn't they do it? Because the risk profile is the same. If the stock goes up $1, down $1, their call is going to go up or down $1. So it only makes sense to convert your option by exercising to the stock so you receive the dividend. When they do exercise that when they do exercise that option, well, if you're shorted, right, you got to deliver the stock. So really at that point, if you have this position on and your counterparty exercises, the position goes away and you don't get the dividend, right? Because you don't need, the option goes away, they take away your stock, that's it, you're done, right? The position, and you're not going to get the dividend anymore. And you don't have this position on. So the only time it will work is if the counterparty forgets to exercise or decides not to, then yes, then it will work. But that happens, but it doesn't happen all the time. It happens, you have to get lucky. And the thing is that there are market makers that are using this strategy, knowing that there's sometimes people who forget, and they're doing basically a wash sale with each other to try to take away those positions from other people. So you have that also working against you. But the idea there is like, yes, if the other side did not exercise and you held on to this position, then that would be great. You would get that dividend, right? You would get that dividend, and you know, even if the stock goes down the next day by the amount of the dividend, you would make that up in the call, because the call would go down as well. But in reality, you know, most of the time, and you know, brokers even, I think, send out notifications to people, hey, this is a candidate for an early exercise, you should pay attention. You know, most of the time, the counterparty, if it's a candidate for an exercise, they will exercise, and you'll get that called away. All right. So that's what happens in reality. You know, in reality, most of the time, people care about their, you know, positions. They're trying to trade efficiently, and when they detect this is an early exercise, you know, I should, you know, it's going ex-dividend, I need to exercise this deep in the money call, right? It has to be an early exercise candidate. You're not going to exercise in at the money or out of the money. That would be crazy. It has to be a candidate where it's so deep in the money, it's acting like stock anyway, and they will exercise the call. So your position at that point, you know, you're going to get called away. Your short option goes away, and you have to deliver the stock. Okay. So I think that's what the question, you know, what the question was from reading it. And I just wanted to kind of go over it. You know, if there's a follow-up question, let me know. But we have like 2 minutes.
Yeah, nothing follow up, D. Great job as always, my friend. Thanks for putting it on for the Chameleon community.
All right. Thanks everyone for joining. Everyone stay safe out there. Have a great trading day, and hope to see you guys tomorrow.
All right, great